Hello, ladies and gentlemen. This is Thomas Fross here with Fross and Fross Wealth Management, where we at least attempt to be the voice of reason in a world full of the pundits of pessimism and the wall of worry. As always, please make sure you read the disclosures that were attached to this video, or if you happen to be watching on social media, it's real simple. Just go to www.frossandfross.com and read any of the disclosures that you might find therein. So in today's commentary, I thought I'd talk a little bit about market timing. You've probably heard us in one of these videos say that it's time in the market, it's not trying to time the market. Why do we say that? Because trying to time the market can be extremely difficult at best, if not impossible. So what I thought I would do today, since we're in 2024, is look over the last 50 years with every year that ends in 4 and look at some reasons why maybe investors, some excuses investors could have used why not to be invested in equities, and see whether or not that was a good idea or not. Because whether bad news headlines come from the newspaper or from a push notification, the fact is there will always be negative news that will make investors nervous. So let's go back 50 years to the year 1974. Was it a perfect year to invest in equities? Well, President Nixon resigned. There was an oil crisis and a global recession. Plenty of reasons, bad news reasons not to invest, right, in equities. But if you would have invested just $10,000 in 1974 in the S&P 500, despite that bad news, by the end of 2022, which also was not a good year for equities, the S&P 500, that $10,000 would now have been worth in 2022 over $2 million, $2,012,000. Not too bad. Then we go to 40 years ago, 1984. We had 78 U.S. banks that failed that year. Not the best year. Plenty of reasons, excuses not to invest in equities. The S&P 500 was up 6% that year, but $10,000 invested 40 years ago, and the S&P would have been worth at the end of 2022 over $730,000. Now let's go back 30 years to the year 1994. We had interest rates that were being raised, much like they were in 2022. It caused the bond market to sink. There was the Rwanda genocide. The S&P 500 was up a little over 1% that year, but $10,000 invested 30 years ago in the S&P 500 would have been worth at the end of 2022 over $180,000. Now let's look back 20 years ago to 2004. 290,000 people were killed in a tsunami. There was a civil war in Rwanda. The S&P 500 was up over 10% that year. But $10,000 invested in the S&P 500 at the end of 2022 would have been worth $63,000. Not bad for a 20-year return, up 6 times. Now let's look back 10 years ago to the year 2014. We had the rise of ISIS, an Ebola breakout, deep racial divisions. The S&P 500 was up over 13% that year, but $10,000 invested 10 years ago in the S&P 500 would have been worth at the end of 2022 over $31,000, still tripled in 10 years. Now, what do we have today? Well, plenty of reasons not to invest in equities, right? We have a contentious elections and an Israel-Hamas war. And then, of course, there's the war in Ukraine with Russia. Where will the S&P 500 finish this year? Well, we'll know at the end of the year. Where will a $10,000 investment in the S&P 500, where will that be in 10, 20, 30, 40 years? Well, we'll have to see. But if history's on our side, it's time in the market. It's not trying to time the market. Now, this is not to say that equities are for everyone. If you're very bullish and you think the market will do well, we have a portfolio built for you. And if you're very, very bearish, if you think the world's coming to an end, well, the fact is we have a portfolio that's built for you as well. And now with interest rates and the high 4s and low 5s on the 10-year Treasury and CDs, we've got some very good investments for nervous investors. But still, time in the market. It's not trying to time the market when it comes to equities. As always, it's a pleasure to work for all of you. On behalf of Fross and Fross Wealth Management, thank you. for letting us take care of you. If you have any questions, please feel free to reach out to our office. As always, have a wonderful day.